If you're thinking about starting a business in Thailand, or if you have one already, this video is going to help you avoid costly mistakes. We are going to talk about the key components that you must manage in your business year by year, whether it's your first year in business or your 10th year. Hey friends, my name is Amanda Gedney. I'm the founder and CEO of Settle in Abroad. At Settle in Abroad, we help people relocate to Thailand. We assist with business services including business formation, accounting, bookkeeping, legal services, everything you need to manage your business and life within Thailand. You need a team that you can trust, and we are here for you. For the ever-changing laws in Thailand, the different requirements needed, we are always up to date so we can assist you in the best way so you can live in Thailand stress-free. Watch this video to learn more. As a brief introduction to this video, we will talk about the 3 key business formation structures for foreigners to choose from when setting up a business in Thailand. The Thai Company Limited, BOI promoted companies, and the Amity Treaty. The Amity Treaty is where Americans can have majority ownership of their company. They can even own 100%. It is possible to have shareholders from different countries as a part of your company, but Americans still have to have majority. So this is a fantastic opportunity only for Americans to own majority shares in their company, so it has a chance for you to grow a large business and be able to keep the profits yourself. So the other option is the BOI promoted company. If you have a great business idea for Thailand, maybe quite a large business, the BOI promotion might be worth you applying for. However, there's a lengthy interview process, only certain industries are allowed, and this is not for a small online business, for example. They're really looking for a big business such as manufacturing, and if you are a tech company, you have to be paying high salaries to local developers to be able to qualify. Lastly, the Thai Company Limited. This is the most standard business structure in Thailand. Most foreigners are using a Thai Company Limited. This is where you have a 51% Thai shareholder. In Thailand, foreigners are able to be directors of their company. This gives you some protection. Directors have the full access to the company bank account only. They have signature power. So if you're nervous about having a 51% Thai shareholder, knowing that you can be a director might alleviate some of those nerves. And in the company setup, you are able to put additional legal documents in place to really make sure you are on the same page with your shareholder and you're comfortable with the company you're setting up. One quick note before we move on. One costly and very illegal mistake that many foreigners make is having a Thai nominee 51% shareholder. So what's a nominee? A nominee is basically a stranger's name on paper. This means you do not know this Thai person, they are not doing any business with you, simply they're just a name on a paper so you can pass the requirement. The government is very strict about this, very, very strict. So this is something you don't want to do from day one to hurt your company. If you're going to choose the Thai Company Limited, make sure you have a Thai shareholder you plan to do some business with. Don't put yourself in a bad situation from day one. It's just not worth it. Now, let's dive into one of the most confusing parts when setting up a business in Thailand: company capital. You must have at least 2 million baht in company capital to be able to sponsor yourself for a work visa and work permit. If you want to have 2 people to have a work visa and work permit, you must have 4 million baht in capital. After your company is formed, you must deposit this money into your Thai bank account. This capital can be used in your business to pay your normal expenses, office rent, your salary, employee salary. However, you need to make sure that your transactions are in your business bank account and that you're recording your expenses correctly. To stay 100% compliant, you should be fully using your business bank account for all your business transactions. In the next section, we will talk a bit more about recording expenses correctly. How do you record your expenses as a business in Thailand? It's very important, very detail-oriented, and you don't want to mess it up. The easiest way is having a tax invoice. So for example, you go on a business trip, you stay at a hotel, they can easily give you a tax invoice with your company details on it. So the company details that must be on the receipt are your company name, make sure it's written correctly. For example, is your company a company limited? It should have your company name with company limited on it. It needs to have your company address, and most importantly, your company tax ID number. And of course, the details about what the expenses are. For a hotel stay, for example, if you don't transfer that from your company bank account and you pay by credit card, as long as you have a tax invoice, it is possible to use that as a company expense. There are more confusing expenses. For example, you transfer from one Thai company to another. You're supposed to have a 3% withholding tax in that transaction and report that to the revenue department monthly. So there are many details regarding recording expenses, and they have to be done correctly to avoid the costly mistakes of paying extra tax that you shouldn't be paying because you actually have the expenses. If you make these expenses, you don't have the proper receipts, nothing's from your business bank account, it's very difficult to use that as a proper expense on your taxes. So the costly mistake here about expenses is paying unnecessary extra tax that you shouldn't be paying if you would have just recorded your expenses correctly. And that's why you have a professional bookkeeper, an accountant, someone you can always talk to, because every transaction you make in your business, you might want to ask your accountant about to stay 100% compliant. When you have a company in Thailand, you're required to submit your annual financial report annually. This is called your PND 50, your corporate income tax filing. So this would be your income and expenses throughout the year. There is no way to avoid filing this. You have to submit it annually whether your company is dormant or not. If you don't submit it, you will accrue fines. These fines will double and double and double year by year, month by month. There's truly no way to avoid paying them. If you decided you're done doing business in Thailand and you want to close your company, that's perfectly fine. However, you can't close your company without submitting your financial report and paying all the past fines. So there's truly no way of avoiding it, and it's really important to stay on top of your deadlines and have an accounting team you can trust to make sure everything is done correctly and on time. Let's talk about visas. If you're setting up a business in Thailand, you're most likely going to get the non-B and work permit. This is a 12-month visa that can be renewed annually as long as you follow the requirements. You must have at least 4 full-time Thai staff on your team to be able to get yourself a visa and work permit. You must pay their Social Security and PND-1 each month to stay compliant. When you need to renew your visa, you will have to submit to immigration 12 months of the Social Security payment and the PND-1 payment. This is for the renewal. When you're first getting the visa, you just have to show 3 months of this payment to start. There can be a lot of confusion around what Social Security and PND-1 is. Social Security is giving your employees benefits. How this works is 5% is taken from their salary automatically. So basically, the employee is paying 5% of their salary to the government for their Social Security funds. The other 5% comes from the employer. So at the end of the month, your employer pays the 5% Social Security on top of their salary. PND-1 is an additional withholding tax that is only a requirement when salaries are higher than the minimum wage. So if you're paying your staff the minimum wage, which is okay monthly for the non-B and work permit, then as long as their salary is higher, that's when you need to do PND-1. As a foreigner having a non-B and work permit, you must pay yourself a salary of at least 50,000 baht And this is required that PND1 must be taken out of it because of the threshold of the income. In the previous part of the video, where we're talking about paying yourself and paying your staff, what comes next? Filing your personal income. So in this video, we've talked all about your business setup, your business income, but even you still have to pay personal income tax. So as a foreigner making at least 50,000 baht salary, you have to annually submit your personal income tax. And the same thing with your employees. It's up to you if you want your employees to file their PND 91 on your own. It is not required as a business that you have to have your employees, you don't have to file for them. However, you want to make sure that your employees are also being 100% tax compliant too. So you can decide within your business if you want to file your employees' PND 91s, or you want to make it their own responsibility. But at the end of the day, this needs to be filed. Otherwise, the revenue department's going to send a letter to your company asking why your employees have not submitted their PND 91. So it's all connected. Business income, personal income, it all comes down to your business. You want your business to be clean. It's in your name, so you want to be compliant in all sections. So that's why you have a team you can trust. The key takeaway is simple. Compliance in Thailand is not optional. Small mistakes can become expensive very quickly. You want to stay on top of everything regarding your business and accounting and avoid the most common mistakes. Here they are. Using Thai nominees, illegal. This is actively enforced. Not registering for VAT when you should, or missing reportings. Missing the annual financial report deadline. Using personal accounts for business expenses. Not understanding that even a dormant company must file, and not knowing your tax deadline. From annual filings, visa, personal taxes, employees, social security, PND1, company capital, as you can see, there are a lot of moving parts that are so important when having a business in Thailand. I think doing business in Thailand is one of the best places in the world you can. Feel free to reach out to us for more information. We offer consultations, free 15-minute calls, and paid 30, 60, 120-minute calls to really talk about your specific situation in more detail. Click the link below. We have the link to our schedule and our other social media channels that we're always updating. Thank you so much for stopping by, and we look forward to seeing you next time. Thank you.